Money is never still. It's always moving, flowing from hands that waste it to hands that multiply it. The question is, will it come to you or pass you by? The truth is, money doesn't chase people. It chases purpose, discipline, and vision. Most people spend their whole lives working for money, while a few learn how to make money work for them. And the secret is this: those who master the art of attracting investors don't need to beg for capital. They become the kind of person capital can trust. Because wealth doesn't respond to need, it responds to wisdom. Before anyone gives you $1, they're really investing in one thing: you. They're asking, can I trust this person with my capital, my time, my belief? You see, people don't buy ideas, they buy belief in the person behind them. The biggest mistake dreamers make is thinking money will solve their problems. No, money magnifies who you are. If you're careless, it multiplies your mistakes. If you're disciplined, it multiplies your results. So before you learn to use other people's money, learn to be the kind of person money wants to follow. Trust, that's the foundation of all wealth. Long before money changes hands, something far more valuable is exchanged: belief. People don't invest in ideas, they invest in the individuals behind those ideas. They look for character before contracts, consistency before charisma, and results before promises. I've met men with brilliant ideas who couldn't raise a dime, and others with simple concepts who built empires. The difference wasn't intellect, it was integrity. Because here's the truth: money follows trust, and trust is built one kept promise at a time. In the early years of my career, I learned a valuable lesson from a mentor. He said, before you can multiply money, you must multiply trust. At first, I didn't understand. I thought success was about strategy, opportunity, and timing. But he explained that people hand over their hard-earned dollars not to the most persuasive person, but to the most reliable one. And reliability isn't proven in the big things, it's shown in the little things. When you say you'll call, do you? When you promise delivery on Friday, is it there Friday? These small moments build the foundation of credibility that attracts bigger opportunities. Think of trust like compound interest. Each kept promise adds a little to your account. Every honest communication adds a bit more. And just like money, trust grows exponentially over time. But break it once, and you lose not just the principal, you lose the confidence that fuels every future investment. That's why wealthy people guard their reputation like they guard their fortune. Your word becomes your brand, and your brand becomes your magnet. When I was starting out, I didn't have capital, connections, or experience. But what I did have was reliability. I showed up early. I worked late. I didn't exaggerate results. I didn't promise what I couldn't deliver. Slowly, people began to notice. They'd say, if he says it, you can count on it. And soon, trust turned into opportunity. People started offering to partner, to invest, to collaborate. Not because I had something extraordinary, but because I had something rare: consistency. The moment you start thinking about attracting investors, the first question you must ask yourself is this: would I invest in me? Be honest. Would you trust your own discipline, your own habits, your own track record? If the answer is no, that's where your work begins. Build your reliability before you seek resources. Strengthen your habits before you seek help. When you become the kind of person you'd invest in, the world begins to notice. Wealth isn't built by luck or persuasion. It's built on character and proof. When people can look at your life and see patterns of honesty, delivery, and growth, they'll want to join your journey. Remember, investors don't just buy into your plan, they buy into your person. So before you build wealth, build trust. When people believe in you, everything else follows. Money doesn't flow to need, it flows to value. That's one of the great lessons of life. You see, you can stand on any street corner and say, "I need money," and you'll notice that the world keeps walking. But if you say, "I can solve a problem," suddenly people stop to listen, because investors, partners, and customers aren't drawn to desperation, they're drawn to opportunity. The art of attracting capital begins not with asking, but with offering. When what you offer carries real value, money finds its way to you like water finds its way downhill. When I was younger, I remember being full of ideas, big ones. I'd get excited, sketch out grand plans, and talk about how much I needed to make them work. My mentor listened quietly one day and said, "You're asking the wrong question. Don't ask who will give me money. Ask who will benefit most from what I'm building." That shifted everything for me. Because the truth is, wealth is not built by those who need capital. It's built by those who create value so clear, so practical, and so beneficial that people want to fund it. Think about this. Every great fortune began with a solution. Someone saw a problem others ignored and decided to fix it. Henry Ford didn't just build cars. He built affordable transportation. Steve Jobs didn't sell phones. He sold simplicity and design. The same principle applies. No matter how small your project is, find the pain and offer the cure. Define it clearly, measure its benefit, and communicate it in terms that others can see, touch, and calculate. When an investor can clearly grasp how their dollar turns into more for them and for others, the conversation shifts from persuasion to partnership. Now, creating value isn't just about products or services. It's about perspective. If you can save someone time, energy, or money, you're creating value. If you can improve efficiency, reduce stress, or increase opportunity, you're creating value. The challenge is that most people spend too much time trying to look impressive instead of becoming useful. You don't need fancy words or a flawless pitch. You need clarity and conviction in what you're offering. When you sit across from an investor, don't sell them your dream, show them their return. Demonstrate how your vision serves a greater purpose, solves a real need, and generates measurable benefit. The richest people on earth are problem solvers. They see pain points as gold mines, and they treat every problem like an opportunity waiting to be transformed into wealth. So, stop chasing investors. Start creating irresistible value. Build something that works, that helps, that lasts. When you do, investors will start chasing you. Remember, money is attracted to results, not requests. Focus on serving, not selling. Build solutions so strong that capital has no choice but to find you. Because in the end, the key to attracting wealth is simple. Solve something worth paying for, and the world will pay you well for it. Before you ever ask for capital, you must first earn the right to speak its language. Money, like any intelligent guest, doesn't stay long where it's misunderstood. It goes where it's respected, where it's managed with skill and clarity. And that begins with financial literacy, the ability to read, interpret, and communicate in the language of numbers. Ignorance doesn't just cost you opportunities, it repels them. Competence, on the other hand, attracts capital because it signals control, understanding, and maturity. I've met so many ambitious individuals who come with big dreams, powerful visions, great enthusiasm, even impressive work ethics. But when I ask, "What's your cash flow projection?" or "How does this venture make money in 6 months?" they fall silent. That silence doesn't just end the conversation, it ends confidence. You can't expect someone to invest in what you don't fully understand yourself. Investors trust numbers more than narratives. They look for clarity, precision, and accountability. And if you can't explain your financial picture with confidence, they'll assume you're not ready to handle theirs. When I was first learning about business, I didn't start with marketing or sales. I started with math. I learned how to read a profit and loss statement, how to track cash flow, how to calculate return on investment. And I'll be honest, it wasn't exciting at first, but it was necessary. Because once I understood how money moved, I could start directing it instead of being directed by it. And that's when everything changed. Understanding the language of money gave me power, not power over others, but power over my own financial destiny. Now, you don't need to be a certified accountant to attract investors, but you must be financially fluent, know where every dollar goes, understand margins, costs, and timelines. Create a mock financial plan even before you have funding that shows how your business will operate. When you can explain your project's numbers simply and confidently, you separate yourself from the majority. Because most people sell enthusiasm, few sell understanding. You see, competence inspires confidence. When an investor senses you've done your homework, when you can discuss risk and reward intelligently, when you can show how every dollar will be used and how it will return, suddenly you become credible. And credibility is priceless. Investors want to know their money is going to someone who not only dreams big, but also manages wisely. So, take time to learn. Read books on accounting, finance, and valuation. Study how businesses grow and why they fail. Learn to forecast, to plan, to measure. And once you've mastered those basics, simplify them, because true understanding is being able to explain complexity in plain language. The moment you can do that, people will start trusting you with their money. Remember, money doesn't just chase vision, it chases competence. Become a master of financial literacy. You won't have to beg for capital. It will come seeking you. When someone hands you their money, they're not just giving you currency, they're giving you trust. And that trust is sacred. Borrowed money is borrowed belief in your vision, your discipline, and your integrity. The moment you misuse it, you don't just lose the money, you lose something far more valuable: credibility. I've always believed that how you treat other people's money says everything about how ready you are to handle your own fortune. Because if you can't manage trust at a small scale, the universe will never hand you more. In the early days of my career, I watched entrepreneurs make a grave mistake. They celebrated raising capital as if it were profit. They'd buy new offices, new suits, and sometimes even new cars, all while their business was still gasping for air. They forgot that investor money is not for comfort, it's for creation. It's not for you to live better, it's for the business to grow stronger. When you misuse borrowed capital, it's not just a bad decision, it's a betrayal. You've taken someone's faith and turned it into fuel for vanity instead of vision. And once that happens, you've burned a bridge that no apology can easily rebuild. When I finally began working with investors myself, I made a personal rule: I would treat their money even more carefully than my own. Every dollar had to serve a purpose. Every expense had to connect to growth. If a purchase didn't directly contribute to progress, it was postponed or eliminated. I built systems of accountability, clear records, transparent reporting, and consistent updates. I didn't wait for investors to ask for reports. I sent them voluntarily. Because when you communicate before being asked, you demonstrate professionalism. And professionalism builds loyalty. There's a principle I live by: pay others before you pay yourself. When an investor believes in you, make sure they see their trust honored first. Whether it's returning capital, paying dividends, or sharing progress, always make their return a priority. because the way you treat one investor determines whether you'll ever attract another. The world of capital is small, and reputations travel fast. Protect yours fiercely. Now, using other people's money responsibly doesn't mean avoiding all risk. It means managing it wisely. It means knowing that every decision you make with that capital must be guided by stewardship, not emotion. Ask yourself, is this purchase productive or indulgent? Does it build long-term value or satisfy short-term pride? Because the moment you start treating borrowed funds like your own playground, the game ends. The wealthy understand this deeply. They know that borrowed money, when used responsibly, can accelerate growth, create leverage, and expand opportunity. But they also know that the first rule of leverage is respect for the money, for the mission, and for the people who believed in you enough to invest. So before you take a single dollar from someone else, remember this: borrowed money is borrowed trust. Handle it with care, manage it with wisdom, and return it with honor. Do that consistently, and you'll never struggle to find investors again, because the world always funds those who protect faith with integrity. Results speak louder than any pitch you could ever make. You can talk about vision, passion, and potential all day long, but when it comes to attracting investors, nothing persuades like performance. People don't invest in words, they invest in proof. And the truth is, if you want others to trust you with their money, you must first show what you can do with your own. Performance builds confidence, and confidence opens doors that persuasion alone could never unlock. When I first began my business journey, I didn't start with millions. I started with a few small wins. I learned early that credibility is built in stages, not by what you say you can do, but by what you've already done. So I focused on mastering small projects, delivering more than expected, and documenting every result. And you know what happened? Word began to spread. People saw results and said, if he can do that with a little, imagine what he could do with more. That's the secret. When you prove yourself on a small scale, the world becomes willing to bet on your ability to perform at a larger one. You don't need a huge investor to get started, you just need to start with what you have. Too many people wait for the big opportunity before taking action, when in reality, it's the small opportunities that build the foundation for big ones. Start where you are. Launch a small product, test an idea, finish one project, but finish it well. Excellence attracts attention, and attention attracts capital. Each successful outcome becomes a story you can show, a reference you can share, and a reason for others to believe in you. And don't underestimate the power of documentation. Keep records, real data, real results. Show growth, even if it's modest. Collect testimonials from satisfied clients or partners. These become your currency in the world of investors, because when you can demonstrate tangible impact, revenue, savings, or improvement, you don't have to convince anyone. Your results do the talking. There's a principle I've always lived by: start small, succeed early, and scale gradually. Too many people want to leap before they've learned to walk, and they end up falling hard. Investors don't look for perfection, they look for patterns. A pattern of discipline, consistency, and steady growth. If you can show that you've built something sustainable, even on a small level, they'll trust that you can handle something bigger. Think of reputation as your invisible partner. Long before you walk into a room, your results have already introduced you. A track record opens more doors than charisma ever will. So focus on performance. Be reliable. Deliver what you promise, and a little more. Do that long enough, and you won't have to chase investors. They'll start chasing you. So, don't talk about potential, prove it. Don't promise results, produce them. Every completed project, every satisfied customer, every milestone achieved becomes a brick in your foundation of credibility. Build that foundation strong, and you'll find that money follows excellence like a shadow. Results are your greatest advertisement. Make them impossible to ignore. There's a clear difference between a spender and a steward. A spender consumes what's given, but a steward multiplies it. A spender asks, "How can I use this?" while a steward asks, "How can I grow this?" That mindset alone separates those who attract wealth from those who lose it. When you're trusted with other people's money, or even your own, the question isn't whether you'll spend it wisely, it's whether you'll multiply it faithfully. Investors don't look for spenders, they look for stewards, people who handle resources as if every dollar were sacred. Early in my career, I learned something powerful. Money is never neutral. It either increases under discipline or disappears under neglect. I once knew a man who received a large investment for a business idea. Within a year, the business was gone, and so was the money. Why? Because he thought like a spender. Every dollar that came in was an opportunity to upgrade, not to expand. He confused access with ownership. He thought receiving capital meant success, but capital only amplifies what you already are. If you're disciplined, it multiplies your strength. If you're careless, it magnifies your weakness. When I began to see money differently, as a responsibility, not a reward, everything shifted. I started tracking every dollar like someone was watching over my shoulder. I asked myself, if I were an investor in my own business, would I approve of this expense? That question changed my behavior. Suddenly, waste became visible. I began cutting unnecessary spending and reinvesting those small savings into areas that produced growth. The principle is simple. Stewardship turns small efficiencies into big results over time. But stewardship goes beyond managing money. It's about managing trust. When someone invests in you, they're not just watching the numbers, they're watching your behavior. They're observing how you handle stress, how you communicate setbacks, how you respond when things don't go perfectly. Being a good steward means staying transparent, humble, and accountable. It means sharing progress regularly, not just the wins, but also the lessons. Investors respect honesty far more than perfection. When you admit what didn't work, analyze it, and improve, you demonstrate maturity. And maturity attracts more trust, which leads to more opportunity. I often remind people that stewardship is what transforms temporary resources into lasting wealth. It's not about having more, it's about managing better. You can start with a little and turn it into a lot if you handle it with care, but you can start with a lot and end with nothing if you handle it with pride. The choice is always in the mindset, spender or steward. So I'll ask you what I asked myself years ago. If an investor were watching how you manage your money, your time, and your opportunities, would they be inspired to give you more? If the answer's no, then that's your starting point. Track, refine, communicate, and multiply. When you prove you can handle what's small with excellence, life and people will trust you with what's great. Stewardship, not spending, is the seed of sustainable wealth. When it comes to attracting investors, numbers alone rarely close the deal. People invest in visions, futures they can see, believe in, and feel part of. Money is practical, yes, but human behavior drives capital toward opportunity that feels alive, tangible, and achievable. If your vision is foggy, your results will be too. I've learned that investors aren't just buying your product or service, they're buying into the story, the journey, and the person leading it. When they feel inspired, the money flows. When they feel unsure, the money stalls. Early in my career, I worked with a young entrepreneur who had an incredible idea, but he struggled to communicate it. He rattled off facts, statistics, and spreadsheets, yet he couldn't make anyone see why it mattered. I told him people invest in belief before they invest in numbers. He realized that no matter how strong the plan was, if others couldn't envision themselves in the outcome, the capital wouldn't come. Together, we reframed the story, focusing on the problem being solved, the impact created, and the transformation possible. When he presented it the next time, investors leaned in. The numbers were there, but now the heart and mind were aligned. A compelling vision doesn't mean exaggerating or promising the impossible. It's about clarity, credibility, and connection. Investors need to see not only where you're going, but how you intend to get there. Milestones create trust, and visuals make abstract plans concrete, whether through mock-ups, diagrams, or even a simple prototype. Demonstrating the journey makes your vision real. When someone can see and feel the potential, they don't just consider investing, they feel compelled to participate. Your story must also communicate the benefits for all involved. It's not just about your success, it's about theirs too. How does your venture create value for investors, customers, and stakeholders? How do their contributions become part of the growth story? Paint that picture vividly, using language that resonates emotionally as well as logically. Humans respond to what they can imagine vividly, so give them the experience in their mind's eye. I always remind people that vision without clarity is just a dream, but clarity without vision is uninspiring. Numbers alone attract analysis. Vision attracts belief. When you craft a vision that is understandable, relatable, and emotionally compelling, investors don't feel like they're risking, they feel like they're joining something meaningful. The task is simple yet profound. Tell the story, show the path, and make the future irresistible. Investors will follow where vision leads. When it comes to attracting and keeping investors, generosity is more than a virtue, it's a strategy. Money flows to those who make others win, not just themselves. The moment you show that everyone involved can benefit fairly and visibly, you transform a transaction into a relationship, and a relationship into a lasting partnership. Greed may bring quick capital, but it rarely brings loyalty or repeated investment. Investors are drawn to those who honor their contributions, celebrate milestones, and create systems where success multiplies for all. Early in my own journey, I noticed a pattern. Entrepreneurs who were generous with recognition, profit sharing, and opportunity attracted more capital than those who hoarded information or returns. One client I mentored structured his deals so that every investor received not just their promised returns, but also regular updates on how their money was making a difference. He celebrated small wins publicly, thanking investors personally and highlighting their role in success stories. Not only did this build trust, but it also motivated investors to increase their commitment over time. Generosity doesn't mean giving away control or taking on unwise risks. It's about fairness and transparency. Define profit-sharing terms clearly from the outset so everyone knows what they're getting and why. Communicate progress consistently and show how contributions translate into real results. Publicly acknowledging milestones, whether it's through reports, testimonials, or celebrations, signals that you value your investors beyond the numbers. It creates a sense of pride and emotional investment that money alone cannot achieve. Reinvesting success into future collaborations reinforces this culture. When investors see that profits are used to grow the enterprise, enhance returns, or open new opportunities, they gain confidence in the long-term vision. Generosity becomes a self-fulfilling cycle. The more you make others win, the more they will invest, the more you grow, and the more value you can return. Remember, attracting investors isn't about manipulating capital. It's about inspiring belief and trust, structure deals that reward fairly, celebrate contributions, and reinvest wisely. When people know they win when you win, they don't just invest once, they commit for the long haul. Wealth built this way is not only financial but relational, and its momentum is unstoppable. Credibility is the foundation upon which all lasting wealth and investment is built. Before you even think about raising capital, you must understand that people invest in character long before they invest in ideas. Money is drawn to reliability, precision, and consistency. Qualities that signal to investors that their resources will be managed responsibly. I've often said and observed countless times that credibility is the currency before currency. Without it, even the most brilliant ideas fall flat because trust is absent. Early in my career, I witnessed entrepreneurs with exceptional business models fail to attract funding simply because their reputation hadn't been established. Conversely, those who consistently delivered on promises, kept immaculate records, and communicated transparently found that investors sought them out proactively. One young business owner I mentored started with a small service-based project. He didn't immediately ask for capital. Instead, he focused on showing up, delivering exceptional results, and documenting each outcome. When he finally approached investors, he didn't have to persuade them. His credibility had already done the work. Building credibility starts with discipline. Show up on time, honor commitments, and maintain transparency in every decision. Keep detailed records of financial performance, operational decisions, and lessons learned. These records aren't just for investors, they are your proof of competence. The tangible evidence that you are a steward who can be trusted with more significant resources. Every small, consistent act of reliability compounds over time into a reputation that precedes you. Your word must be your bond. When you promise results, deliver them. When you commit to transparency, maintain it even under pressure. Investors notice these traits because they signal risk management and foresight. It's far easier to scale capital when people have already seen that you are dependable, disciplined, and precise. Credibility attracts opportunity, multiplies trust, and often opens doors that capital alone cannot. Remember, you don't earn investment by demonstrating need, you earn it by demonstrating reliability. Build your reputation first, let your results speak, and when you finally seek capital, the right investors will already be lining up. Your credibility will do the selling for you. Even when your bank account reads zero, your mind can still operate in the currency of opportunity. Wealth begins in the mind long before it arrives in the ledger. I've seen people with modest means outthink and outperform those with deep pockets simply because they trained their minds to think like investors. The key is perspective. Treat every idea, every project, and every potential venture as if you were placing your own hard-earned capital on the line. Your thought process becomes the seed from which real wealth eventually grows. When I was starting out, I had little more than determination and a notebook. Money was scarce, but my thinking was not. I spent hours analyzing opportunities, imagining how I would allocate funds if I were the financier. I asked questions like, what's the risk? What's the return? Could this idea scale? Could it produce recurring income? By rehearsing these scenarios mentally, I trained myself to recognize valuable opportunities before most people could even see them. This mental discipline became my invisible capital, a skill that attracted actual investors later. Studying investor behaviors is essential. Learn how portfolios are structured, how risk is assessed, and how decisions are made. Read case studies of companies and entrepreneurs who succeeded and failed, analyzing the financial and strategic reasoning behind each outcome. Treat these lessons as if you were preparing for a boardroom presentation tomorrow. even if the only audience is yourself. Role-play pitches, challenge your own assumptions, and ask the hardest questions. Would I invest in this if it were my money? How much am I willing to risk, and what is the potential reward? The beauty of this practice is that it doesn't require capital, only discipline and curiosity. The mind trained in the investor's mindset begins to spot leverage, understand risk and value assets in ways most people overlook. By thinking like an investor, you develop the habits, language, and intuition that will allow you to attract capital when the opportunity arises. Wealth follows the mindset first. Action, strategy, and resources come after. Start now, even with nothing but ideas. Every decision you evaluate like an investor, every opportunity you dissect critically, compounds into the ability to act decisively when capital becomes available. Your mind is your first portfolio. Invest in it wisely. Even the smallest victory can become a magnet for opportunity. People invest in proof, not promises, and even modest successes create the credibility that draws bigger backers. I've learned that the journey to large-scale wealth begins with small, deliberate steps. When I first started speaking and teaching, I didn't have a grand platform or a massive following. I began with a single seminar, a handful of attendees, and a commitment to deliver extraordinary value. That one small success became a story I could show, a result I could document, and a proof point that attracted greater opportunities. The principle is simple. Before you ask someone to commit their money to a big idea, demonstrate that your approach works. Small projects are laboratories of credibility. They allow you to test strategies, refine systems, and learn what resonates with clients or investors. By completing a small, profitable project first, you reduce perceived risk for others. People want to see tangible results, metrics, testimonials, or even a before and after snapshot of progress. These small wins become your social proof, signaling that you can deliver on promises and manage resources responsibly. Reinvesting these small victories is as critical as celebrating them. The funds, relationships, and insights you gain from a modest success can be leveraged to pursue bigger ventures. Each success compounds into greater credibility, which in turn attracts larger investors willing to share the journey. I remember a time when I completed a simple seminar series with minimal resources. The testimonials and word of mouth generated from that effort became the foundation for scaling into larger events, attracting more significant backers, and ultimately establishing a career I could not have imagined before that first small step. Document everything. Keep track of numbers, results, and impact. Visual proof speaks louder than words alone. A small win, clearly demonstrated, communicates competence and reliability, which are the currencies of investor confidence. Every small project you complete, every minor success you celebrate and showcase, compounds into the ability to tackle bigger challenges with confidence. Start small, succeed visibly, and let those successes speak for you. Every modest victory is the first chapter of a story that will attract bigger backers, larger capital, and greater opportunity. Partnerships are one of the most powerful engines of growth, but they are only as effective as the foundation upon which they're built. Too often, people enter alliances out of desperation, seeking someone else's resources to compensate for their own weaknesses. That approach rarely works. True partnerships multiply strength. They don't replace it. I've seen countless ventures collapse not because the idea was bad, but because one party relied entirely on the other to carry the weight. Dependence erodes control and accountability, and it breeds resentment. The secret to leveraging partnerships is to enter them from a position of strength, with your own value to contribute. Before approaching anyone to collaborate, you must first understand what you bring to the table. Identify your unique skills, resources, and influence. What problem can only you solve? What can you deliver reliably and consistently? Knowing your strengths allows you to negotiate relationships on equal footing, creating a dynamic where both parties multiply their impact. I recall a project where I partnered with a fellow speaker. Rather than leaning on his audience or reputation, I came prepared with my own material, client network, and organizational skills. The result wasn't just shared success, it was exponential success. Each of our contributions built off the other's strengths, creating outcomes neither of us could have achieved alone. Once the partnership begins, roles must be crystal clear. Who is responsible for what? What are the measurable goals? Ambiguity is the silent killer of collaboration. Every partner should know where their responsibility begins and ends. This clarity not only prevents conflict, but also ensures accountability. Even in the best alliances, you must never outsource your responsibility for results. A partnership is a multiplier, not a crutch. If you fail to uphold your commitments, you're not just letting yourself down, you're weakening the entire venture and jeopardizing trust. Finally, treat collaboration as a two-way street. Your partner should feel as if they gain more than they give, because that balance creates loyalty and long-term alignment. Partnerships are not about shortcuts, they are about shared effort and shared vision. When approached with integrity, strength, and clarity, alliances become the accelerators of wealth and opportunity. They allow you to achieve scale far faster than any solo effort, while still keeping your independence intact. Enter every partnership from strength. Contribute fully, clarify roles, and maintain accountability. That is how collaboration multiplies success, without compromising your control or vision. Money has a peculiar way of magnifying our emotions. Fear can make us sell at the worst possible moment, and greed can push us to overcommit when logic screams caution. I've witnessed brilliant opportunities lost because someone let panic or excitement dictate their actions. Emotional decisions are expensive decisions, often costing more than mistakes in judgment or timing ever could. The first principle to mastering wealth is realizing that your feelings should never run your financial life. Logic preserves capital, emotion burns it. The disciplined investor creates rules, clear, consistent criteria that govern every financial choice, and then sticks to them without exception. Begin by writing down your decision criteria before opportunities or crises even appear. What return do you expect? What risk is acceptable? What timeline makes sense? When the market fluctuates or a new deal appears, you have a reference point outside your mood to guide your actions. This framework turns reaction into strategy. I remember the early days of investing, seeing headlines spike and plummet and feeling the urge to act impulsively. Instead, I reviewed my written criteria, took a breath, and let the numbers, not the noise, dictate my choice. The result was preserved capital and compounded growth, while many around me panicked. Next, give yourself 24 hours before reacting to financial stress or excitement. This simple pause acts like a cooling off period, allowing rational thought to rise above emotional impulse. Opportunities don't vanish overnight, but decisions made in haste can. Waiting even a single day can prevent panic selling, overpaying, or chasing ill-considered trends. Over time, this habit builds mental discipline and confidence. Finally, evaluate outcomes quarterly rather than daily. Daily market movements or financial fluctuations are distractions, not signals. Measuring results over longer periods allows you to assess performance accurately and make informed adjustments without emotional distortion. By focusing on systems, criteria, and disciplined evaluation, you ensure that your financial decisions are consistently rational, repeatable, and ultimately wealth-building. Detach your feelings from your finances. Create rules, pause before acting, and review methodically. Logic will preserve your capital. Emotion will only burn it. Wealth is not a solitary pursuit. I've learned over the years that those who focus solely on accumulation often miss the greatest source of growth, the multiplier effect of generosity. True prosperity flows to those who enrich the lives of others. Every time you help someone succeed, whether by sharing knowledge, offering guidance, or connecting them to the right people, you create a ripple that eventually circles back to you. Investors, partners, and collaborators are naturally drawn to individuals who add value without immediately expecting something in return. Generosity builds trust, credibility, and influence, all of which are far more compelling than any spreadsheet or pitch deck. Start small but intentionally. Help someone improve their business, refine their presentation, or clarify their strategy. You don't need to invest money to make a meaningful impact. Your time, insight, and support are assets in themselves. These acts of giving are also lessons in humility, perspective, and patience. They teach you to think long-term and to measure success not only by personal gain, but by the positive effect you create around you. Share useful resources without expecting immediate returns. A book recommendation, a contact, a tool. These seemingly small gestures build a reputation for generosity that compounds. People remember who gave when the stakes were low, who offered wisdom without strings attached. Over time, this reputation becomes a magnet for opportunities. Investors want to place their money with people who have integrity and a track record of creating value for others. Generosity signals both. Finally, make generosity part of your brand. Position yourself as someone who gives first, leads by example, and invests in the growth of others. When this becomes part of your identity, it transforms how people perceive you and how opportunities find you. The more value you spread, the more wealth circulates back. I've seen this in my own journey. The doors opened, the partners who joined, and the investors who believed, all because the focus was on giving, not taking. In the world of wealth building, generosity is not a weakness. It is the ultimate strategy. Enrich others, and prosperity will inevitably follow.